Hi everybody, Boris, BK Forex. Welcome to the weekly technicals for commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar from May 21 to May 25, 2018. And the story in the COM dollar is essentially the one that's been going on for quite a long time, which is that it's a low volatility referendum on dollar strength. And this week we actually saw a little bit of COM dollar strength, a little bit of recovery as they came into some very long-term support levels, especially on the Aussie and the Kiwi. Caddy was a completely different story. Caddy actually sort of was the major disappointment of the week. I had dollar CAD as my trade to the downside last week, and I was right for about 5 microseconds before the whole trade went sideways. We'll discuss it in just 1 second, but let's take a look at the levels and see where things stand at this point. So still, that long-term support at 74 in the Aussie very much holds. From 74 to 76. Dollar CAD is inching its way back towards that very, very key 130 level. And that is, of course, a function of a whole bunch of stuff that happened this week, which I'm going to discuss in a second. And Kiwi dollar looking finally like it may be catching a little bit of a bid. One of my ideas last week was the negative Aussie Kiwi trade, which finally starting to show some promise, and we'll cover that in the crosses in just a second. Anyways, let's take a look at the calendar here. It's a very quiet calendar. We got just New Zealand retail sales front of the week, and I think we don't have any. Well, we have the trade balance out of New Zealand, and that's about it, I think. We literally do not have any data from the COM dollar land at all. Everything was this week. And of course, the big story this week was the massively disappointing Canadian data. Cooler than expected CPI, weaker than expected core retail sales. The whole brouhaha of Canadian economy actually really picking up steam, clearly not working. And just to add salt to the wound, to literally rub it deep into my thesis, was the collapse of the good feelings about NAFTA negotiations, right? Prior to this week, there was some very positive noises coming out of Ottawa suggesting they were very close to making deals on the NAFTA situation. And then this week, the U.S. negotiator just poured cold water over all that speculation. And the problem here, frankly, is actually Mexico rather than Canada because of the various wage negotiations. But the bottom line is it still seems to be a long way off before they can negotiate an NAFTA deal. And of course, that's having a secondary but nevertheless powerful negative impact on dollar CAD. Having said this, though, it's interesting, though, to take a look at the charts here, because you're starting to see, let's start with CAD because to me it's sort of the most interesting on the weekly charts. You see that it's still trading against that big flame out of the 130, right? So you could look at this on a very, very short-term basis as this sort of a retrace rally against still a very, very important terminal point. And you could try to short against this 130 on the idea that maybe the strength of the loonie is going to reassert itself this week. Given the fact that we have no data and that there seems to be little promise on the NAFTA front, that may be problematic. What's more interesting, though, from a technical point of view on a weekly basis is if you change your perspective to a little bit longer time frame, this actually looks much more positive dollar CAD than negative. Because if you see here is you see a nice trend on a weekly basis building up with higher lows. And really, you can almost trade it both ways with very low risk. So the low over here is 27.20. Basically, 127 stop to the long side. Pretty much, if you're correct, the uptrend will maintain itself because the higher low will stay in place. Or the 130 stop to the top side could be the stop that holds the short trade in place. It's a push. Although, given how we had a change of sentiment here in Canadian data and Canadian political negotiations, it's tough to want to get short this pair. But dollar Canada is notorious for making big changes on the moves. I mean, if you look at the candles here, if there's ever a pair that kind of changes sentiment, it's this one here. It looks like a flame out, only to be a full engulfing bullish candle, only to completely come down and retrace itself. It's a very volatile pair based upon the latest headlines, which is why very tough to trade on any kind of a confidence level. But still, I think it's interesting to look at it. At least you know where the risks are when you're trading this on a technical basis. Aussie dollar, on the other hand, looks a lot more predictable and certainly a little bit more steady. What we see here is a pretty clear confirmation that the 74 handle has certainly acted as a decent support. Furthermore, we still have very decent support from the employment data. The employment data was actually quite good, and therefore provides, I think, a relatively steady underpinning. We don't have any data going forward, and there is certainly no news out of the RBA coming out. So it really becomes then a matter of yield differentials. If the U.S. yield starts to slip down towards the 3% level, away from the 3.1, we have a reasonable chance here for a short covering move towards the 7,600, just simply because we've had such a long sell-off here that just a small amount of short covering certainly is due. Those of you, by the way, who just watched my majors video and you saw me show you like an 8 green candle composition in dollar yen, this is exactly what I'm talking about. This is a 7 green candle composition in Aussie dollar. 1, 2, 3, 4, 5, 6, 7, and you see that statistically it creates a natural outlet for a turn. So in this case, the turn is much more pronounced, but I think it's reasonable in dollar yen. You could have the same structure. That's why I point that to you on the charts. And last but not least, Kiwi dollar also finding a modicum of support here. 68, clearly a very, very strong support level. Kiwi's basically been a 68.74 trade. Aussie has been a 75.80 trade on a longer term basis. And we have to see if it can prove itself to be a support. I'll tell you one thing though. If we take out the lows on both the Kiwi and the Aussie, the posture completely changes, because then it becomes a very, very different situation, and we would have taken out long-term support levels. So as long as we're hovering around these levels and they're not threatened, and 68 remains in place, I think it's a relatively decent bet to maybe get a little bit long here on just a dollar profit-taking short covering rally, perhaps maybe to the 70 handle as the week develops. That's how the COM dollars are shaping up. I wish you guys the best luck, the best trading. Boris, over and out.